Hello traders and welcome on the video review. Today is Thursday, the 1st of the October 2020, and we are going to take a look at the Forex calendar today, and then we are going to see if there are any interesting pairs to trade on the Forex market. So let's just begin with the Forex calendar review. What kind of important events we have today. So as you can see, on Thursday, the 1st of the October, there's only one event that will have a high impact on the Forex market, and this is the ISM manufacturing data release. It will be released at the 4 o'clock p.m. Basically, and the data will be for the period of September. As you can see, the previous reading was at the 56 points and the forecast is still at the 56 points. So the market participants do not expect any improvement. So they might be a little bit surprised if the forecast reading will be better than expected. Of course, in that situation, if the data will beat the expectations, the American dollar and the American dollar pairs will likely be getting stronger. So most of the market participants will likely buy dollar and then sell the other crypto and the other currencies. So this is why it's worth to watch this this data at the 4 o'clock p.m. and watch the pairs which are related to the American dollar, which are, for example, euro dollar, American dollar, Canadian dollar, British pound, and American dollar. So the cable, as they say, and of course some other important markets like gold and S&P 500 and Dow Jones, of course, because all of them are related to the internal money flows and of course the dollar, which is the reserve currency of the world. So the data are very simple to understand today. Only ISM manufacturing data to be released at 4 o'clock today. So let's just maybe take a look at the chart. Let's start with the chart of the gold. As you can see here, I got prepared my gold chart. I'm using the Japanese candlesticks, and as you can see, this is my standard chart, which is daily time frame chart, because I guess the daily time frame is one of the best time frames to do the analysis of basically any market. So what do we have here? Let's just make some technical supports and technical, of course, resistances. So this is my resistance. It will be in red. So the yearly high, basically, which is at 2074. This is the long-term resistance and the yearly high, of course. And let me just mark this level, which is the level of support, long-term support. So this will be like a green line here, and this is the 16th of the March 2020. So this swing from the 16th March to 7th of the July, basically, this is the market move that will be analyzed in this video, basically, because it's one of the most recent and one of the most important ones. So we got the main support, we got the main resistance. What else, of course, do we need? Let's just make one more line. This will be like a long-term trend line. As you can see, I got it here, and I will make it in orange. So as you can see, the market is trading below the trend line, right? So we got this move up here towards the 2074. Well, this is 75 here, but it doesn't actually matter that much. So we are going lower, right? Because there's a correction in a gold market, and as you can see here, we got the bearish engulfing pattern here at the top of this move up, and then again continuation. And it's very important to mark the low of the first sell-off wave. So this low is around 1864, and this is very important, level, and I will show you why in a minute, because I will just mark it. This is support, so let's just make it like a green line, so that's okay. This is our support, and as you can see, the market just went towards this support anyway. This was the first time it established the support, then it went again to test it. So but this level has been broken, right? It's been violated because the low was made at the level of 1848. Nevertheless, as you can see, the price almost for these 2 days here almost closed around this level. So it's been probing this market a little bit lower, but then we can see that some kind of demand is showing up here, and finally the boost has pushed the price a little bit higher. And right now the intraday resistance is located somewhere here, because this is the level of let's say that one would be maybe a little bit, there you go, this level is yes, this level is the resistance 1905. This is the intraday resistance for the gold. So any breakout higher above this level, in case of the data will be better than expected, then of course we will buy American dollar and sell gold, so we will reverse. If data will be worse than expected, and let me just remind you that the forecast reading is 56 points, then of course we might go a little bit higher towards this trend line here, and then of course the question is whether we will break it or not. If we will break it, it's worth to put some kind of another target for the bulls, and this target will be just right at this top here, made on the 16th of the September 2020, and this is around the level of 1973. So somewhere there, let me just try to magnet this level, if I can do it. There you go. Yes, this is the level of interest for the bulls, right? So this will be 1974, 73. So we are waiting, as you can see, patiently before the data release, before the high impact data release from America. We are just consolidating here in this area, and then we are waiting for the breakout, right, or reverse. Basically, this is how it looks like. But let me just put one more thing on this chart. I will just put the Fibonacci retracement. This is my favorite basically tool when I'm measuring this kind of moves. And as you can see here, the price is hovering just, as you can see here, just above the 38% of Fibonacci retracement, 1834. It has not been touched yet. It has not been touched. So I think in the case of better than expecting data, we might see some kind of a reversal, maybe not very strong, because there is 1865 support here. But if the support is violated, then clearly we might go lower, below the lows of the 25th and 24th of the September, and the lows are 1849. Let me just put the line here on this lows, and if these lows are violated, then the next target for the bears is 1835, right? So this is the scenario in case the data will be worse than expected, better than expected. If the data will be worse and traders will buy gold, then of course we are getting a little bit higher. We will break above 1905. This is the intraday technical resistance, and then of course there is a bigger resistance ahead of us, which is this trend line, as I said. So any breakout above the trend line will likely make the price move around the level of 1974. Finally, it doesn't mean this move will be made in one day. only in a case when the data will be completely disappointing, like way than two standard deviations from the median and or from the forecast reading. So then yes, we might go even higher than 1974, maybe towards 2000, the level of the 2000. But generally, we're just right now waiting for the data release, and we will see how this market is positioning itself before the important data will be released today from the United States. So this is my analysis of the gold. Of course, it's quoted to American dollar. Remember, we are staying just below this technical resistance, and we are waiting for the data release. There is potential for the move up, and there is potential for the move down. It all depends what will be the data. If they will surprise traders, if they will surprise the markets, or they will be in line with expectations, then of course we will just continue this horizontal move, but we can still test the level of 1905 because it's a important intraday resistance. And if data will be, of course, worse than expected, then we have a breakout and we might go higher and higher towards 1974, especially if the data will be completely disappointing. So this is my plan, and this is my analysis of the gold before the ISM manufacturing data release from the America. So thank you very much for watching this analysis, and I wish you guys happy trading. See you next time. Bye bye.